for taking time out for the Q2 and H1 FY20 conference call of PPAP Automotive Limited. We have with us today Mr. Abhishek Jain, Chief Executive Officer and Managing Director, and Mr. Anurag Saxena, Chief Financial Officer. We will begin the call with opening remarks by Abhishek sir, and then we will have the question and answer session. I would just like to point out that certain statements in today's call may be forward-looking, and we have already put out a disclaimer to that effect at the end of the presentation. So I would now like to hand over the conference call to Abhishek sir. Over to you, sir.
Thank you, Gaurav. Thank you, Janice. Ladies and gentlemen, a very good afternoon to all of you. I am Abhishek Jain. I welcome you all to the conference call to discuss our financial performance for the second quarter and half year ended 30th September 2019. Firstly, I'd like to give a short brief about the industry and the company. Then I will talk about the financial performance, and then we can take up any questions which you may have. The passenger vehicle sales registered a double-digit degrowth on a year-on-year basis. Commercial vehicle sales fell more than 50% on a yearly basis during the quarter under review. The sector has been suffering due to factors such as transition from BS4 to BS6, liquidity crisis, credit crunch, high insurance and registration charges, and of course higher axle load norms. Overall, the inventory levels in this period were high at the dealer's end. OEMs have either taken a price cut or have increased their discounts in order to boost the demand. Availability of finance still remains a concern for the industry. On a better note, the monsoon season has been better than expected at 110% of the long period average this season. It was well distributed with 31 out of 36 meteorological subdivisions receiving normal to excess rainfall, which has aided the rural income to a significant extent. Coupled with this, income tax reforms have come as a relief to the industry ahead of the festive season. We believe this has partially offset the revenue and margin pressure which have been there for a long time. I believe everybody heard about the good news on Dhanteras. There was a very strong demand for the automotive industry, and a lot of vehicles were sold that day. Considering these situations, we strongly believe that the downtrend in OEM sales is kind of bottoming out now, and we should soon witness an uptick in demand post the improvement in market sentiments. So just a small recap of what our company is about. So we are into manufacturing of polymer extrusion-based automotive sealing systems, interior and exterior injection molding products. We have 7 facilities spread across the key automotive hubs in India, and we manufacture over 1,000 different SKUs, and we ship over 200,000 parts every day to our customers, which include the Japanese OEMs as well as the other major OEMs operating in the passenger vehicle segment as well as the commercial and the two-wheeler segment. The company continues to focus on enhancing its per-car contribution. We are able to attract new opportunities in both sealing systems as well as injection products. Post the establishment of our facilities, which are now closer to the customer, we continue to build on our core competency and on achieving excellence throughout the gambit of our organization. Now to give you a brief take on the financial performance for the 30th September 2019. Overall, it was a very challenging quarter for the entire auto as well as the auto ancillary sector. In the quarter under review, our revenue from operations on a standalone basis stood at 85.29 crores compared to 92.05 crores, witnessing a degrowth of 7.3% on a quarter-on-quarter basis. Our part sales for the quarter stands at rupees 80.51 crores as against 88.44 crores. The industry continues to face demand challenges which have impacted the company's top line as well. The company's EBITDA stands at compared to 15.24 crores in the last quarter, a degrowth of 28.7%. The EBITDA margin for the quarter 2 stood at 12.73% compared to 16.56% in quarter 1 due to dip in sales resulting into reduced spread of fixed cost, mainly the employee cost as well as inventory cost. We are making our best efforts to make the company lean and more adaptable to changing environment. We are positive that no sooner the demand returns, the company shall bounce back to its financial performance. PAT for quarter 2 financial year 20 stood at rupees 4.32 crores compared to 5.76 crores in the previous quarter. PAT margin stood at 5.08%. The EPS for the quarter stood at 3.09 compared to 4.11 in the last quarter. There are visible green shoots for the OEMs as well as auto industry. I strongly believe that the auto and auto component industry has a lot of headroom for growth. As soon as the macroeconomic conditions are favorable and the market sentiments turn positive, the sector will be performing much better than before. So that is all from my side, from the introduction side. Now, I would like to hand over to Janice to take the call forward.
Sure. Thank you very much. Ladies and gentlemen, we will now begin the question-answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Mittal Sangvi, individual investor. Please go ahead.
Yeah, thank you for taking my question. I just wanted to understand on the breakup of the revenue side. So, Abhishek, you have mentioned that the part sale contributes around 80 crores, which was around 88 crores same quarter last year. However, the other revenue, the mold, is basically has gone substantially down. Can you just give us more picture on the sale of the molds in the next 2 quarters of the FY20?
In the other income, basically the part sales है ना 85.28 का तो 80 हो गया ना breakup. Tool sales कितनी थी इस quarter में?
Hello, hope I'm clear on my query.
Hello?
Yeah.
Yes.
So,
basically, this tool sale is only happening when a new model is being made by the customer. So these are not part of our business currently. And so as soon as there's a new model which is being launched by a customer, that time this tool sales take place. So these are basically just one-time activity which happens.
Correct, sir. Can you give a little bit more picture on your expectation in the next 2 quarters for the tool sales based on the pipelines that you may have?
See, all those information are linked with customer projects. So it will be very difficult for me to disclose that information.
Sure. I mean, would it be on a similar levels, or you think there will be a significant change to it? If you can give a little bit of a picture on that.
In quarter 4, we are expecting a new model, some sort of an increased tool sale to happen because of launch of some new model which is going to happen.
Sure. Okay. Thank you very much. I'll come back in the queue for the other question.
Thank you. We take the next question from the line of Romil Jain from Systematics PMS. Please go ahead.
Yeah, hi, sir. So I just had 2 questions. One on the demands from the OEM, going ahead. So how is the production schedule looking like maybe from next 2-3 months from here? and how likely that can be sustained? And second question is on the value addition trend in terms of our products. Thanks.
Mr. Jain, as far as the demand from the OEMs are concerned, so I think we all read that during this festive period, especially Dhanteras to Diwali, a lot of vehicles got sold. So a lot of inventories are clear now. And today, in fact, is the first day after this Diwali break that all the companies will be operating. So I'm sure either this week or next week we should be able to get a clear picture of how the next 2 months are going to go based on what has happened in the last week. But as of now, we don't see any demand. We've not got any revised schedules from our customers. So whatever is expected in this quarter is, we're not expecting any growth to come out in this quarter.
Okay. So
as far as value addition is concerned, we are trying to find more opportunities where we can increase the value of the product that we are selling to the customer.
Yeah.
Supposing, I'll give you an example, like in our sealing system, we make black type of weather strips.
Correct.
And now we've started making steel exposed types. So the difference in price in both these variants is about 20 to 30%.
Okay.
So we are trying to get into more of these products. On the injection side, instead of doing only mold to sold parts, which are very competitive in the market and we can't add much value, now we are getting into sub-assemblies. So sub-assemblies, like, we did a project about 1.5 years ago with commercial vehicle maker SML Isuzu. We developed the complete instrument panel with them. Then we've been doing all door linings for all Honda cars that are manufactured in India. Then for Maruti, instead of just focusing on mold to sold parts, now we are getting into these center console assemblies and other assemblies. So this is the kind of value addition that we are getting into with all our customers.
Okay. So, sir, just a related question to this, because we are getting into so many, different product lines. How is the competitive scenario in those lines?
No, competition is always there in whatever we do. But our competitive advantages we have. So see, we don't just go to the customer and tell him that, we just give us this product and we'll make it for you. So we have our whole study which happens before that, and we've got our own design team who's already working on these part development, making the product design, making tooling designs. Then we have our in-house tool room which manufactures all the tools and dies and equipment that are required. We've got our in-house validation facilities. So when we go to the customer gets a complete one-stop solution from us.
Okay.
Wherein everything we can do by ourselves. And by ourselves also we can do it in-house. So we are very competitive for the customer and very attractive for them.
Sure.
And now that we've got facilities in Pathredi, which is just about 30 kilometers from Maruti, Manesar, and we've got a facility in Gujarat, which is about 28 kilometers from SMG. So these two facilities are also quite attractive for the customer to source products from.
Okay.
So this whole ecosystem that we've developed in the last couple of years, so this itself is a very competitive package for the customer.
Okay. And capex number, if you can tell, for the year? How much we've done in the first half and for the full year?
This particular H1 we have incurred around more than 10 crore in the capex.
Okay, and full year?
It depends on basically right now our one major, only we are doing the relevant capex which is required for the customer side only. Otherwise, all the capex is on hold.
Okay.
And if it is required, then only we are reviewing and allowing that.
Okay, sir. Thanks a lot and all the best.
Thank you. Thank you.
Thank you. We take the next question from the line of Ankit Suchandi from Axis Securities. Please go ahead.
Hello. Good afternoon, sir. My question is related to the margins. Your margins have historically been around 18 to 20%, upwards of 20% in the last year, but this year we've seen a steady decline. So what is the contribution of pricing pressure that you're facing on the declines of margin, and what is the contribution of the fixed cost? Can you throw some light on that?
Mr. Ankit, we can confirm to you that we're not facing any pricing pressure of our products. So during this downturn, we've not given any special discount or reduced our prices or anything.
Okay.
So we are continuing with the same prices that we were giving to the customer, and whatever change contracts are there with the customers, those are still effective, like foreign exchange contracts and all that.
So then, what is the...
When it comes to product pricing is same. And if you look at our numbers, so raw material cost and employee benefit expenses, everything are value-wise, they are all coming down. But it's just that because of the lower amount of sales, as a percentage of sales, those are reflecting in a lower number. So the margins are less, but...
No, but your raw material cost has also not decreased in line with the decrease in revenue, I see. So that is why I was asking, in terms of pricing, have you taken any cuts, or is it the fixed cost that is increasing the raw material consumed as a percentage of your revenue?
Basically, it depends on the product mix. Right now, the product mix, you are looking at this raw material cost is much on that side. Otherwise, it's around, you will see around 51% or 52% somewhere on that.
Yeah, closer to 53% this quarter, which was around 51%, 51.5% at the start.
We are into the 2-3, this extrusion and injection molding part.
Okay.
So it depends on the number of parts and what type of parts.
Okay, so this should I assume that this product mix will continue the same in the next 2 quarters, or we'll go back to the previous product mix?
It changes every quarter depending on the demand from the customer.
Okay, and quarter 3 you've not had a change in demand, is what was said earlier, right? In this quarter itself, you have not received any fresh demand till now for quarter 3.
No, not really.
Okay. Thanks, yeah, that's all. I will come back in the queue if I have another question.
Sure.
Thank you.
Thank you. Before we take the next question, I would like to remind participants, if you have a question, please press star then 1 on your touchtone telephone. We take the next question from the line of Manan Shah from Moneybee. Please go ahead.
Hello, sir. Thanks for taking my question. So I wanted to know that in last couple of days there has been news that Honda is planning to shut down their Greater Noida plant. So I wanted to know how would that affect us?
Mr. Manan, we've got our facility close to Honda, which is about 2 kilometers away.
Right.
So we have been discussing with Honda since a long time about this issue. And as far as we are concerned, we are operating from 2 plants for Honda. One is our Pathredi plant, which caters to the Tapukara Honda plant, and one is our Kasna plant, which caters to the GNU plant, Greater Noida plant.
Okay.
So as of now, whatever line we have confirmed to them for the next model, which is supposed to launch next year, we will still produce in our Kasna plant, and we will ship all the parts from here to their Tapukara plant.
Okay.
So as far as we are concerned, right now we don't have any impact of Honda shutting down this plant.
Okay. But in the future, like, do we see that the orders from them will slow down, or?
No, they have a lot of extra capacity in Tapukara plant. So I think Tapukara plant installed capacity is about 3.5 lakh cars.
Mm-hmm.
So right now they are at 140, 160 levels.
Okay.
So they have a lot of headroom over there.
Okay. Okay, and in last con call, you were talking about some exports. So if you can just throw some light on that, like how are you progressing on that?
Sorry?
I believe in the last con call you had mentioned that we were trying for exports.
Yes.
So if you can just throw how is that progressing?
Yes, so currently we are exporting our parts to Japan and South American countries and Mexico through our customers.
Right.
So in this business, Nissan is our biggest customer, and Nissan meaning Renault Nissan. So even on the Renault side, so those discussions are still on with the customer, and right now they are discussing this overseas development of Quid model. They are planning to launch it in another country, and as soon as they finalize that business, they'll start buying from us.
Okay.
Yeah.
Can you let us know what is the capacity utilization across all our plants?
Around 70%.
And what would this be last year?
Around 85 to 90%.
Okay. Okay. And as we all are aware that the OEMs can't sell BS4 models post April. So is the production for those models expected to remain subdued for the next 2 quarters?
See, a lot of OEMs have already stopped producing BS4 vehicles. They've already started producing BS6 vehicles.
Right.
So I think by end of this year, this calendar year, I think all BS4 vehicles will anyways production will be stopped, because nobody wants to have any inventory in the last quarter, because anything which is left post April 2020, it will basically be junk.
Right.
So that transition has already started.
But the fuel for BS6 will be available only post first April, is that right?
See, BS4 vehicle can run on BS6 fuel,
right,
but the emission norms of the BS6 standards will not be achieved if you use BS6 fuel in a BS4 vehicle.
Right.
But BS4 vehicle will still keep on running on BS6 fuel, even if the fuel changes in April or maybe in January or something.
No, what my question is that since BS6 fuel will only be available post 1st April, even if companies start producing BS6 vehicles, the sales will actually not pick up that quickly since the fuel won't be available. Because they can't run, or I think the BS4 fuel is harmful for the BS6 engines in the summer time.
Yeah, but I think government has given indication that BS6 fuel will be ready in time.
Okay. Okay, thanks. That's all from me.
And I think if there is any problem in the availability of fuel, the government will take some suitable actions on it.
Okay. Okay. Thank you.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. We take the next question from the line of Dhiral Shah from Phillip Capital. Please go ahead.
Yeah, good afternoon, sir, and thanks for the opportunity. So, what is our progress in terms of Hyundai, sir?
Hyundai, we started supplies for their Creta model, and now we are developing 2 more models with them, not directly with Hyundai, but 2 with their tier 1 supplier. And we are developing one more new part for Hyundai, so which will be sold across most of their models, and maybe that part will go to Kia also.
Okay.
So whatever cars are there with this sunroof, so we are developing some part for that application, sunroof application.
Sunroof application. Okay. Okay. And sir, are we, targeting MG Hector?
Mr. Shah,
Sir,
sorry to
cannot
interrupt.
hear you.
Request
Can
you
you
to
speak
please
up
speak a
little
bit louder.
Yeah, sir, are we targeting MG Hector?
Yeah, MG Hector is already our customer.
Okay.
So we are already supplying to MG from our Gujarat facility.
Okay.
So currently, I think we are supplying them 2 or 3 parts only.
Okay, sir.
On the injection side. But now discussions have started with MG on the sealing system also.
Okay. Okay. And sir, in this two-wheeler space of Suzuki motorcycle, what we are supplying, sir?
For Suzuki motorcycle, we are supplying basic plastic parts like cover, shield, and other parts.
So are we targeting
Protection parts for Suzuki motorcycle.
Okay. So are we targeting any other two-wheelers, sir?
We are doing some business for Honda motorcycle, but that is tier 1 business. We are not supplying directly to Honda motorcycle, but we are supplying to their tier 1 vendor.
Okay. Okay. And sir, any new product in the pipeline?
If we are trying to develop our tool room as a commercial tool room, so that is one area which we are trying. And then we are exploring opportunities in this electric space also. So we are currently studying a couple of projects of what value addition we can do there.
Sir, whatever parts we are developing, it's EV immune, right? So what we are developing for EV, sir?
I'm sorry, at this time I cannot confirm to you, but we are doing feasibility of certain things, and I think whenever those things are confirmed, we'll inform you.
Okay. Okay. Thank you, sir. That's it from my side.
Thank you.
Thank you. Next question is from the line of Shreyas Devan, individual investor. Please go ahead.
Hello.
Yes.
Yeah, Mr. Jain, just wanted to ask you one thing. So we have Maruti as our biggest customer, and then we have Honda. So just wanted to know what is the nature of our duration of our contracts with them? Like, is it a short-term contract, like it is reviewed every year, or it's a long-term contract for say 3 or 5 years?
See, every contract is, we have one general purchasing contract with both these companies, which basically is a basic contract. And for every model that we supply parts to them, then that entire life cycle of that particular vehicle becomes a contract for us. So if Honda launches new models and we have some parts to supply for it, so we supply OEM parts for the product, for the life cycle, maybe 4 to 5 years in OEM, and then another 10 to 11 years, we have to maintain
the aftermarket.
For the aftermarket and for the spare parts business for them. So it's actually about 15-year cycle that every part we have to make.
Okay. Okay. So then
same thing goes for all the customers. in the...
Right. So usually once we get into a model, we stay in that model for say 10 to 15 years approximately. So my question would be then, how do we enter existing models? Is there any way that we can enter existing models, or you can just apply for new models that come?
Mainly the business is for new models. Okay. That is where we work on. And that's why if you look at our product cycles, they are generally 2 years in length. So we basically get business for new models for the OEMs.
Okay. Yeah. That's it for now. Thank you. Best of luck.
Thank you.
Thank you. Next question is from the line of Manansha from Moneybee. Please go ahead.
Yeah, hi sir. Sir, if you can give us an idea, what is our content per vehicle for say Maruti, vis-a-vis Honda, Toyota, Nissan? Like if you can give us an idea about that. And is it expected to go up with BS6 or it will remain the same?
No, our product range does not depend on the kind of fuel which is there in the car, nor it depends on the powertrain which is there. Okay. So it may be a petrol engine or a diesel engine or a electric car. Our product range does not get impacted by it.
And what is the content per vehicle for say Maruti versus Honda?
Content per vehicle, it varies with from customer to customer. So primarily in the north area, like for Honda and Maruti, our per car content is better than the south customers. So Honda, we generally have about 6,500 to 7,000 rupees per car. And for Maruti, it ranges somewhere between 1,000 rupees to about 1,800 to 2,000 rupees, depending on the kind of products that we get from them.
Okay. Thank you.
Thank you.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. Next question is from the line of Sunil Shah from Turtle Star Portfolio. Please go ahead.
Yeah, good afternoon, sir. Sir, I have one question. That is, in terms of the new models which are likely to be launched, what is our status there? Meaning the new launches which are likely to come from, say, Maruti, Honda or any other company. How are we positioned on that side? Could you just give us some idea on that?
No, I didn't understand your question.
The new products, the new launches, the new models, the new variants which will come from the auto company.
Yes.
How are we positioned in terms of our business with the new launches which are going to come? So we have some commitment, let's say like we have for MG Hector. It was already there and now, it's in place now. Likewise, I believe even for something like Kia Motors, we are doing some business there as well. So in terms of the new products,
basically for all the Japanese OEMs that are there in the country, so any new model which they launch, we are present with them. Like recently, Maruti launched this YL8, this Ertiga variant. So we are present in that model. Then they recently launched this Espresso. So we have presence in that as well. Kia Motors, unfortunately, is not our customer right now. So we don't have any models with them. Honda is planning to launch a new model next year. So we are developing a lot of parts for them. For Maruti also, I think there are a couple of models under development. So we are working with them. So, I mean, with all the, whoever is our existing customer, so we get business for all the new models repeatedly from them. And whoever is not our customer right now, so Volkswagen is one customer who is not there with us today, but we've already secured business for them for their future new model. And Hyundai we've already started working with. Kia, unfortunately, we don't have any business right now. MG is already our customer.
So anything
our effort is to basically develop all For Tata also, yes, Tata is also a very important customer for us.
Okay.
So this, the new vehicles that they are launching, we are developing parts for them as well.
Okay. So majority of the Tata products launches which are going to come in the next year, we are there, right? So
on the passenger vehicle side,
not on the passenger vehicle. Yeah, absolutely on the passenger vehicles we are there.
Yeah. On the passenger vehicle side, we've got all the businesses.
Okay.
We are working with them.
Yeah. So like you mentioned that, our content per vehicle for Maruti is ranging from 1,000 to about 1,800. What is the content per vehicle for Tata Motors?
Tata Motors, it's about 900 rupees to 1,100. Something in the 1,000 rupee range.
Something in the 1,000.
Yeah. See, because in Tata Motors, we don't have a facility in Pune. So we have a facility in Gujarat and in Chennai.
Mm-hmm.
So logistically, getting injection business for them is very difficult. And they have their internal, Tata Auto component and all those companies which are doing business with them. So with Tata Motors, our relationship is primarily for the sealing system. Yeah.
Right, sir. Thank you very much, and let's look forward to a great auto numbers going forward. Thank you very much.
Thank you.
Next question is from the line of Manan Shah from Moneybee. Please go ahead.
Yes, sir. Last question from my side. Wanted to know that for the parts we supply to the various OEMs, would we be the single source supplier, or would the OEMs normally have like more than one supplier for specific parts?
See, unless and until we give them a headache every day, they don't look for a second source for the existing parts that we are supplying to them.
Okay.
So right now we are not. Our best effort is to give them 100% quality and 100% delivery.
Right.
So there's no issue of them going for a second sourcing for the existing parts that are supplied by us.
Okay. But who would be our competitors for the sealing system?
For sealing system, there are various companies like R.N. Nishikawa is there, Mayur Ingress is there, Cooper Standard is there, then Gold Seal Sargumi is there, PG Minda is there. There are a lot of companies.
Okay. Thank you.
Thank you.
Thank you. I would like to remind participants, if you have a question, please press star then 1 on your touchtone telephone. A reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. We take the next question from the line of Shreyas Devan, individual investor. Please go ahead.
Hi, Mr. Jain, just one more question from me.
Sure.
Just wanted to understand, according to you, do you see any foreseeable disruptions to our kind of business in the next 10 years or so from different competitors or from the industry itself?
You're asking disruption for our business?
Yeah, our business as our industry.
Sorry, I didn't understand. Could you repeat it once again, please?
Do you see any disruptions or potential threats to our business or industry in the next 10 years from competition or from the industry itself?
Frankly, from the industry point of view, because whatever products that we are making, these are basically engine neutral. So it doesn't matter if tomorrow there's a switch from gasoline engine to the electric electrification or even hydrogen based or something. So our products are basically immune from that.
Right.
And from the technology point of view, we are already developing parts using the latest material available today. And we made this shift back in 2004 when we introduced thermoplastic sealing system in the Indian market. Earlier that it was PVC based.
Okay.
So we already have the technology available in the company, and every day we are upgrading our facility, our capability to meet the technology changes, whatever is happening. So we are working hard for all these changes that are going on in the industry, and we are continuously in touch with our customers and aligning our strategy based on what the customer wants to do in the next 5 to 10 years.
Right. In terms of competition, do you see any price disruption happening?
See, competition is something which is not in our hands. And obviously, if the market is becoming bigger, more and more international players are going to get attracted to this industry and specifically to our products, because everybody knows that PPAP today is in a leadership position. So we can't avoid any competition to come in. What we are trying to do is we are trying to make our internal systems, processes, and sourcing especially, and our capabilities such stronger that it's basically impossible for the competition to catch up with us. Right. That's the only thing which is there in our hands, and that is what we are focusing on.
Right. Okay, I think thank you for your answer, and I will just wish you all the best.
Thank you.
Thank you. Next question is from the line of Mittal Sangvi, individual investor. Please go ahead.
Yeah, thanks for taking my question again. So, last year, one of the Concall management has said that they are open for inorganic kind of a growth as well. Is there anything on cards right now?
No, not right now.
Sure.
We have nothing right now.
Okay, thanks.
Thank you. Ladies and gentlemen, that was the last question for today. Members of the management, do you have some closing remarks?
Yeah. So, thank you, Janice, and thank you, Gaurav, from Concept PR for organizing this conference call. I'd like to pay my sincere gratitude to all my analyst and investor friends who have taken time out of their busy schedules to listen to us today. We believe there are a lot of questions that have been left answered, and we would be more than happy if you can engage with Concept or you can engage with us to get these questions answered. In case you need any more clarification, we would be very happy to welcome you to our facilities in the NCR or any other region. We are very keen on showing you the kind of efforts that are being done behind the scenes. So please engage with us in case you have any further query, and thank you so much for today.
Thank you. Ladies and gentlemen, thank you for being a part of this conference call. If you need any further information or clarification, please email at gaurav.g@conceptpr.com or ifran@conceptpr.com. I repeat, gaurav.g@conceptpr.com or ifran@conceptpr.com. Ladies and gentlemen, that concludes this conference for today. Thank you.